It's about that time of day again. My name is Joseph. It's Monday evening already, July 24th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, gold, euro, and DAX tonight. Crude is bullish with a spike in channel, telling us to look for buying opportunities down at the low of that channel. But one big resistance level overhead is also telling us to look for a two-legged pullback down at the battle zone tomorrow. The S&P is bearish with a flag pattern, which tells us to look for selling opportunities up around the highs of that flag, and don't get spooked on the E-mini tomorrow if we do see a sharp correction higher. Now, gold is range bound with a triangle, a little bit of a bull bias on gold, which tells us to focus on failures using that two-try rule around the edges of the triangle tomorrow. And of course, the euro's bearish, the spike in channel, and the price action on the euro chart tonight is giving us some pretty big clues, telling us to avoid those retracements, selling low, and look for traps to sell high tomorrow. And of course, we can't forget about the FDAX. The DAX is bearish and trying to retest today's low, but a major support level from last week's collapse is telling us to stay patient for a larger correction up into that battle zone and a retest of that low probably later on this week. Boy, I get a great newsletter in store for you guys and gals. It's great to be back here with you all. Happy Monday to you. Hope you had a great weekend. One of those last few summertime weekends so the kids go back to school. Hope you guys enjoyed it, but get ready to buckle down. We got a big week ahead of us as we squeeze out the last few drops of this month of July. Before we jump in, though, I do want to remind you the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. There's a link in the description of that YouTube video. Follow that link. Come join me here on the blog at Sideways Markets for the full-length version, all 5 markets, all the analysis on the blog here at Sideways Markets. While you're here, don't forget, join the mailing list. I'll send you an email every evening. The nightly newsletter goes live. Follow me on social, lower left-hand corner. Pick whatever your favorite flavor. StockTwits, Twitter, Facebook, LinkedIn. I'm always posting important charts, links, and updates throughout the week on my many different social media channels. And don't forget to grab those charts. You guys always tell me this is one of your favorite parts about our nightly newsletter. Grab those charts below the video tonight on our blog and have them ready on your computer for tomorrow's session. And please don't forget to grab that free pass. That's right, in the upper right-hand corner, you'll learn more with me in 90 minutes on that free pass than you will anywhere else on the website. I can guarantee you that. So make sure you grab that free pass before you finish up with me here this evening and come out and join me for a few days this week as a guest in the trade room. Big week ahead of us. We got some major news to cover here tonight, and boy, some really big ranges and some nice opportunities setting up for tomorrow. Tomorrow's the 25th day of the month. Now, as we look forward here into the rest of the week, we are going into the last few drops of this month of July. Remember, as we get closer to the end of July, a couple things you want to be thinking about as we go into the end of this week or kind of get deeper into this week. First of all, as we get closer to the end of the month, we do expect to see volatility kicked up, so keep an eye on volatility. Also, towards the end of July, right? This is the last few days of the month of July. I expect a lot of parents to be trying to get as much out of this as they possibly can. Kids going back to school, early to middle parts of August. They got to get ready for school. So I would imagine as we get later in this week, you're probably going to start seeing Wednesday, Thursday, Friday. Just watch the afternoons here. Because I would expect volume to dry up a little bit. And then when you combine that with the end of the month, I would expect to see volatility kick up a little bit. So I think we're going to be dealing with a little bit of challenging price action late in the day, Wednesday, Thursday, Friday. So big thing here this week. Get to it early, both early in the day and again early in the week, because as we get closer to the week, I would expect to see the end of those days right after lunch, expect seeing volume dry up a little bit. And of course, the volatility kicked up a little bit as traders take bigger risks as we go into the end of the month. Some other things to notice here. Tomorrow is the beginning of the FOMC meeting begins tomorrow morning. Not to worry about that for tomorrow, but we will be talking about this in tomorrow night's newsletter, right? We will have to watch closely, right, ahead of that FOMC meeting announcement on Wednesday afternoon. So Wednesday is going to be an inventory day, and it'll kind of be that kind of tipping point into the end of the week and again the end of the month of July. So the moral of the story for this week is get to it early in the day, get to it early in the week, and of course we'll talk more about the FOMC announcement right in tomorrow night's newsletter. Other than that, there really isn't a lot on the calendar here for today, for tomorrow, I should say. No major news in the overnight session, and we got that 4 a.m. IFO survey tomorrow. That's about all you got to worry about tomorrow, guys. In the London session, that 4 a.m. news, we really have some minor stuff tomorrow, right, in the U.S. session. We get consumer confidence. We get the Case-Shiller Home Price Index at 9 o'clock and 10 o'clock. Other than that, though, I would imagine the opening bell up until about 10:45, 11 o'clock, that will really be your meat and potatoes tomorrow. And don't forget, we're going to execute the plan we're going to cover tonight. We're going to execute that plan tomorrow in our trade room, right, in a real-time environment with all of our advanced members. We open up at 8 o'clock Eastern Time. I look forward to seeing you there with me here tomorrow. All right, let's not waste any time here. Let's jump right in. What do we got here tonight? We'll start with crude, S&P, gold, and, of course, we can't forget about the FDAX tonight. Let's first start out tonight by looking at crude. Crude is bullish and trading at the high of a spike in channel, which tells us to look for more reliable buying opportunities after a deep pullback off today's highs. Now, it's easy to see we have a lot of resistance up here. We got the trading, right, the no trade zone, of course, at the top of this channel, measured move, double up. There's a lot of resistance here. I think the most important thing to keep in mind, though, is that measured move. Measured move, of course, always tells us to look for a two-legged pullback off that high and then look for that retest right back up to retest the high tomorrow. As we look at this chart here tonight, it's pretty easy to see the bulls had control for pretty much the entire session today. 1, 2, 3 legs up to a measured move. Heck, they even get a double up target waiting overhead as well. So lots of resistance up top. I think the most important clue here, structure-wise, is going to be this strong move up, right? You can definitely see they're making new highs here, right? But they're not seeing a lot of continuation through that high. That definitely tells us to focus buying low tomorrow. Spike up, pulls back to a new high. We'll call that a spike in channel. You know, I wouldn't argue with you if you called this a spike in wedge. You know, I definitely can see that spike and wedge on the chart as well. The problem with the spike and wedge, though, is it's not giving us very good rotation. You can see the channel just fits better. It fits better as a spike and channel. Now, I really don't care whether you call it a spike and channel or a spike and wedge. It really doesn't matter. I don't want to be buying up around this high. So first things first, the spike and channel tells us, let's look left, let's find some prior swings, and let's see if we can't get a nice deep pullback off of that high to buy low for that target going back up to retest the high tomorrow. Outside of that, then you have the measured move. The measured move gives us a little bit more context. Most of the time, not every time obviously, but most of the time, when you see a measured move hit, you're usually going to see that two-legged pullback back to a level of support, so we then can be buying from there. So I think the measured move is really going to be the big important clue here for tomorrow. Bottom line is we're running into a lot of resistance up here, and I don't want to be buying up around these highs. So what's the plan here for tomorrow? The plan for tomorrow is the bulls definitely have control. I just don't want to be buying high. So I'm looking left, I'm finding areas of support, and I'd like to be a buyer right up off that high, pull back right into the battle zone here. You get the 46.13 all the way down to that 45.91. So how does this look for tomorrow, right? What are some options here? Well, first of all, it could be as simple as a trap low, right? Grab a prior swing, pull back, right, trap low, and right back up to retest the high. That obviously is the most aggressive way, right, that we can do it. Another option would be a failure, right? Price goes below the moving average. The sellers try to sell, right? They fail, and of course, this price runs back up to retest the high as well, right? That would be a seller failure down below the moving average. But then we have, again, that measured move. Measured moves are notorious for nice big two-legged pullbacks. So what we really like to see here is a nice two-legged pullback. Use that trend line, right? Can you use that overhead trend line, bring it up, nice big arc over, right, and get that price to nice deep pullback, right, so we can buy that low and then again target going back up to the high. So again, moral of the story is we'd like to see this price now get up, right, or should I say get down so we can sell it, so we can buy it back up. most important thing is buying low tomorrow. What if price keeps going higher? You know, if price keeps going higher here, there's potential here. We saw a big move down in last Friday's session. If you were watching last Friday's newsletter or last Thursday's newsletter, what if the price keeps going higher? If it does keep going higher, what you want to avoid is buying high. And anytime I find myself in a position where the only option is to buy high, I always want to make sure I look for traps, right? So trap low will definitely be the name of the game if this price forces us, right, to keep buying high tomorrow. So watch for that strong move up and then two-legged pullback, little trap low, right, and that'll at least give you the opportunity to participate in this move going higher without having to actually buy, right, as high as the market wants us to. So as the market pushes higher, two-legged pullback, trap low, that'll be a much more reliable place, right, to be a buyer. We can use this level of support here, right, and try to get buying as low as possible here tomorrow with that trap low. Last but not least, how do we turn bearish? That is possible, right? It's possible. It's not probable, but it's definitely possible. Two things. First thing would be strength, right? Strength move down. Second thing would be hold that pullback. Holding a pullback is going to be essential here for those bears to take control and give us some confidence here running back down to that low. Their objective, by the way, the sellers are going to be hunting for that low at 45.40, but they have to hold that pullback first. So the moral of the story is, if you're trying to be a seller here for tomorrow, make sure you stay patient to actually get control of this market before we go looking to sell, and that requires a strong move down and then hold that pullback as it rolls over. That will give you the green light now, right, that we can start being a seller. We'll look for our own bear channel, right? We'll find some bear measured moves, and the objective will be, again, to get back down, right, to retest today's low at 45.40. So make sure we buy low, two-legged pullbacks, watch that battle zone down around 46.13, and that will make sure that you're buying low. And again, resist the temptation to buy high tomorrow if it does decide it wants to keep trying, right, to bang its head against the wall going higher here. Let's keep going here. How about some S&P? S&P is range bound with bear bias here tonight, and what some traders may also call a flag pattern. This tells us to look for selling opportunities up above the range using the 2-try rule for a target going back down to retest the low tomorrow. Now, one thing that stands out in this chart is the sellers tried twice to retest last Friday's low. Pretty simple to see. Those sellers tried a few times and they failed. This will likely be seen as a major seller failure, which will probably have the bears taking profit. So we can definitely expect them to want to wait for a higher price to sell more tomorrow. So don't be surprised if we do see a pretty big correction higher here. Don't get spooked if the market does, right, want to jump up here in the short term tomorrow. Again, as I look at the chart here tonight, you can see a couple big clues here right now. I think the easiest way to call this is obviously a bear market on Friday into a trading range here for today. I think the range fits the best. The fit, of course, telling us to sell off the high of that range and bring that target back down to that low. With that said, again, like I said earlier, I'm sure a lot of traders are probably seeing these higher lows right now, and they're going to draw this up as a flag, right? A bear flag. What does a bear flag tell us? A bear flag tells us to sell up off of that high, right? So you're trying to sell up off around that high. So either way you slice it, bear bias going into this sideways trading range, or bear strong move down on Friday and into kind of some higher, right? Some higher lows, and we can basically look to sell off the high of that flag. No matter how you slice it here, we definitely want to avoid selling low right now, because we look at this chart, we can see the sellers tried twice and failed twice to retest the low. If you guys watch this newsletter every evening, you know that anytime we see a strong move down, we expect to see a nice big pullback or correction and a retest of that low. We also know they'll usually try twice to get it done. 1 try and 2 tries. So it's very, very clear here. These sellers tried twice. They failed to retest that low at 62 3/4, that prior day low, the prior week low. And now we have to assume that sellers are going to see this, right? They're going to see this area down around that 64 1/4, and they're going to be a little bit intimidated to want to sell low down here. So the moral of the story is we're already seeing enough proof right now. These bears are getting rejected rejected off of this low right now. So we really want to focus our energy at selling high. We're going to see a flip of this, right, kind of the polar opposite of this on the euro in a moment, and we'll also see, right, some examples on gold. So make sure you stay tuned for that in just a moment. Bottom line is, whether you want to call this a bear spike in channel or whether you want to call it a bear spike in range, it really doesn't matter. We're seeing the sellers try twice to retest that low, and they've been rejected. The goal for tomorrow is get price up so we can sell this sucker back down. And as I talk about every evening in this nightly newsletter, you don't have to go at it every day alone out there. We're going to be in our trade room tomorrow morning, 8 o'clock Eastern time. We're going to execute this strategy with all of our advanced members. I hope to see you there. If you're watching the video right now on our YouTube channel, not to worry. There's a link in the description of that YouTube video. Follow that link. Come join me here on the website at schooloftrade.com. Join our free trial to learn more about who we are, what we trade, the strategies we use. I get a lot of questions about this every day on my YouTube channel, right? How do I learn more about the specific strategies? Take the free trial. There's a link in the description of the YouTube video. Follow that link and come join me here as a guest as part of our free trial. While you're here, don't forget, learn about our 3 levels of membership, our beginner, intermediate, and advanced levels of membership, and I'm always here to help you guys out. I realize that most websites these days leave you hanging, but I will always be here to answer all your questions. Hit me up on live support if you have any questions along the way. Once again, hope you guys had a great weekend out there. Back for a big week. Don't forget, we got FOMC coming up, and we're going to the last few drops of this month of July. Kids are about to pack up the books and go back to school, right? And don't forget, right, after we get in the month of August, we'll start seeing that shift into the fall time session, which is hands down, right, the best time of the year to be a trader. Don't forget, keep in touch. You can always drop me a line. My email address is jj@schooloftrade.com. Hit me up on live support. And don't forget to bring some friends the next time, guys. If we don't see you tomorrow morning, 8 o'clock Eastern time in the trade room, same time, same place tomorrow night on the nightly newsletter, bring some friends with you. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.